everyone. My name is Steve Killingsworth, and I'm an investor here in Michigan. You know how most people want passive income but don't know how to get that, especially commercial real estate? What we do is find passive income opportunities for people we trust and allow them to invest with us. We believe in breathing new life into overlooked properties by cleaning them up and converting them from eyesores into pillars of the community. And of course, that's a win-win for everyone. What do we have for you today? X-Base Stores third quarter earnings call with Joe Margolis, CEO. Let's see what Joe has to say about the market. Same-store revenue growth of 18.4%, up 50 basis points from the second quarter. Same-store NOI growth of 27.8%, and acceleration of 760 basis points. In addition, external growth initiatives produce steady returns outside of the same-store pool. Everything is looking good from an extra space perspective. On the acquisition front, acquisition market remains very active, but expensive in our view. And my view, we found the most success acquiring lease-up properties and acquiring stores with a joint venture partner. Most transactions have been relatively small, and we plan to continue to be selective in the current environment. We continue to look at all material transactions in the market, and we have plenty of capital to invest, so we find opportunities that create long-term value for our shareholders. That's something I'm looking to do for my investors too, create long-term value for our investors. Next, occupancy and pricing. Same-store occupancy, once again, all-time high vacates, continuing at historical lows. Strong occupancy resulted in exceptional pricing power. Achieved rates to new customers in the third quarter was 43% higher than our 2020 levels. Our models are pricing units in stores every day and will react on a daily basis. We're going to reduce marketing expenses and keep the gas pressed on rates. That's what you'd like to hear if you're an investor. Lowering expenses, keeping the pressure, moving on the rates. Something called dynamic pricing, similar to what the airline industry does when they're pricing seats. They price based on availability, location, a bunch of other factors. It really allows you to maximize revenue, and that's a tool that's available for independent owner-operators. Key risk identified: new supply, concern given the great amount of performance in the sector, new capital is coming in and adding supply. Return to work. If return to work picks up, that could cause some loss in occupancy, but he's not really concerned. Price increases when storage gets more expensive and our tenants complain. Our managers are really good about solving the problems. And if we're unable to, then we have plenty of demand to backfill their space if they decide to leave. A little deep dive rate. Significant discounted rates during COVID, and that caused us to have some customers that had very, very large gaps between where they were at and where the street was at. And we've been trying to move those customers more towards the street rate. We've done a lot of that already. Most of that is in the rearview mirror. And that's perhaps why, in addition to seasonality, you're starting to see a little bit of slowdown here as we head into November, December, into 2022. Rates are starting to slow down. Rate increases start to slow down a little bit. But, as he just said, stepping on the gas and keeping the pressure on rates. News to everyone's ears, especially us investors. Thank you for joining me. In addition, here are 3 questions the analyst should have asked. If I was on a call, here are 3 questions I would have asked. How are you using technology to improve the customer experience? How much of the top line growth is attributed to boat and RV stores? What is one perk customers are willing to pay extra for? And how do you measure the spread between the move out and the move in? What did that look like? I know I said 3 questions. I would have gotten the number 4 in there if I was on the call. Thank you for listening. We'll see you next time. Go Blue.